All right, good evening, good evening, good evening. How are you? And how has been mentorship with Don so far? I think I've given you guys like 10 videos and we are still counting because we must complete the syllabus. And one of the things I love to do is that when I train people, because my focus is I'm always thinking of when somebody talked outside. Yeah, I was trained with by Don. I was trained. Don trained me how to trade forex, and I'm not very because it's a brand I'm building. You must understand what I'm teaching you. So I take our time to use different means to explain to you. You must get it. You must understand it. You must get it. And see, one thing is that it's sometimes in the recent year, I didn't really pay so much attention to training and teaching people. I'll just focus on trading and making my money and doing one or two other things and just. But see why? Because I don't just if I want to teach you or train you to trade forex, I want to make sure that because I'm selling a brand, it goes beyond you wanting is it goes beyond the person coming to me is because I must teach you and train so that when you see outside, don't train me, I should be proud that you're my student. That's one reason why I follow syllabus. I don't just jump. Why? Because syllabus have been arranged systematically um to do details input in all the subject that we are considering. Okay, so the last class I was talking about the point is to consider when you are trading trendline breakouts. So what do you do at this spot? What do you do at this spot or at this spot? What do you do at this spot? What do you do at this spot? And then over there we were saying wait for the candlestick to close at the touch of the trend line on your chosen time frame. Note that there is something called false breakout. So the next thing is that when the trend line breaks here, when the trend line breaks here, okay, if you draw this trend line on 1 hour time frame, okay, wait for the candle to close below it. Okay, though you may switch to 15-minute time frame. Make sure that 15-minute time frame close lower below this trend line, upward trend line, or you wait for 1 hour candle to close below this upward trend line. Because you see, sometimes you can have price moving down, and then it goes back to close up. You're not supposed to take the decision here yet. You can have a very bullish pin bar here with a very long tail. So the price is moving down, and before you know it, it closes above that trend line. So you watch again, you stay watching again. You cannot enter any trade. Okay, you cannot enter any trade until the candle closes below it. So if you draw this line on 4 hours time frame, you wait for 1 hour candle to close below it. Okay, then over here too, you must have a candle that closes above this trend line before you enter your trade. Because while the candle is still forming, while price is still forming a candle here, you cannot do anything. You cannot enter a buy. And the same thing goes here, whether here or here. And I told you this is a breakout and retest. Breakout retest, if you enter here now, you must have done some break even before this pullback happens, and then it continues in the same direction. So what do you do here? So here you enter a buy here when the candle closes, then you come back to the test, then you enter another buy again. Okay. Um, um, so as I was saying, I said when you see a candle that close below your upward trend line, okay, the candle must close below it. The candle must close above the downward trend line, and just make sure that the candle closes before you take decision. Because sometimes there could be if there could be there could be a reversal candle around here that may go in that'll be a bullish candle, because you have to take note of some of those candles that will be forming along your trend line here. Now if you see a bullish reversal candle along around here, you have to wait. You have to be patient. To be patient that look, if you see a bullish reversal can, for example, now you will see a pin bar formed in this place. See a pin bar formed in this place. Even though it has broken the trend line, but it didn't close below the trend line. You should you have to be patient to watch another candle forming, to the downsides. You have to watch for another bearish candle form to the downside. But if you see a bullish candle formed around this trend line, at the touch of this trend line, the price may want to continue in the direction it has been before. It may want to go bullish. There may be a bounce on that trend line. The same thing happened around here. You see a candle, you know, you see like something like a shooting star here, something like a bearish RMA, something like a bearish engulfing candle around here. You see an angry man candle, around here. It may be telling you that the price may go to the downside. That's why you have to wait patiently. And first of all, you have to draw your trend line correctly. Some of you have not been drawing the trend line from the assignment you have been submitted to me at the DM. You have not been drawing the trend line very, very well. And if you don't draw the trend line very, very well, it might it might make you to enter at the premature times, or enter trade wrongly. Okay, so you watch the trend line, make sure that the candle closes above it, then you enter your trade, and then you watch it go in your direction. The same thing here, the same thing here, and the same thing here, and the other place too. So they say wait for the candlestick to close at the top of the trend line, choosing time frame. Know that there is something called false breakout. Now false breakout, like I showed you yesterday, is when price break the trend line, and then after moving a few candles in the direction of the breakout, then it pulls back and reverses. It pulls back, reverses and go in the direction of the previous trend. First breakout always look real, but after forming few candles, reverses, get to stopped out, get to stopped out with the loss or break even, and continue to follow in the direction of the previous trend. So that happens to there is no strategy. There is no strategy that is 100% perfect. That the downside of trendline breakout strategy. And then today, let's go further. Let's go further. Let's go further. And for what I've said earlier, so you wait for the candle to close at the touch of the trend line in your chosen time frame. And then I said, place your sell stop or buy stop a few pips above or below the intersecting candlesticks. Many times, even when the candle has intersected your trend line, okay, you will not enter the market immediately like that. Many times when you enter, you will enter profit, but there's a check. There is a way I scrutinize the trade, so much so that when the candle breaks the intersect the trend line to the upside, whether to the upside or the downside, I want like 4 5 pips, and I place a buy stop for an up, for 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 a bullish movement, or 4 5 pips below the wick of that candle, to the bearish movement. A few pips, a few pips, between 3 and 5 pips above or below the intersecting candlestick, and then I'll be teaching you, some reversal candle in the next class. Then set take profit within the previous significant swing, or you trail your stop loss. I think I was explaining how you can trail your stop loss yesterday. Many times when we give signals in the signal group, we don't give, of course, not all the time, but in many of the times, we don't give take profit. So sometimes we are watching the market, see if there is, if it's still going in our favor, can be trailing your stop loss, or sometimes when you start saying, okay, there's rejection somewhere, some way, then we can, okay, all right, close the trade. So, but see, if you're a swing trader, trailing your stop loss is very sweet. Trailing stop loss is very sweet. And that was what I was explaining to you yesterday. Then note that the significant and obvious trend line draws global attention, meaning Millions of traders all over the world are watching for the price reactions at the touch of trend line, so you should expect explosive movement. That's very important. You know, when you draw trend line on 1 hour, 4 hours, or daily time frame, millions of people are watching that trend line all over the world. I'm telling you, they're watching the trade, they're watching the the trend line all over the world. The banks are watching, the market makers are they are watching, the big investors are, they are watching, the hedge funds are watching, people are watching the trend all, especially when you draw it from, you know, there's something I told you the other day. When I was talking about significant trend line, there are trend line that are drawn from higher time frame, 1 hour and upwards, and then they are drawn from obvious peaks and troughs, obvious peaks, and not the one you are struggling to see. The kind of peaks and troughs that everybody, even a little child, when a little child look at your screen, they can tell you, oh, there's a peak here, there's a trough here. Obvious ones, conspicuous ones, a clear ones, very glaring, peaks or troughs. People are looking at that from all over the world, all over the world. And when you draw trend line, such trend lines, you need to understand that if it bounce, it's going to be bounce very big. If it breaks, it's going to move explosively. So I said, and so meaning traders all over the world, millions of traders all over the world are watching for the price action or price reaction at the touch of the trend line. So you should expect explosive movement. Explosive movement. You see, before I go further, let me quickly show you something before I go further. Now, look at this. Look at this. Gold has been buying, 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 has been buying. It has been buying for a long time. It has been buying for a long time. But see, sometimes like I think last week or so, we sold gold. Why? Because I watched a trend line here. I drew a trend line here. And the trend line broke. We've been struggling to buy here. We've been struggling to buy here. We bought here actually. I actually bought here. Early one morning, took few pips and came out of the market. But remember that I drew something like this. I'm still going to be explaining deeper to you very, very soon what actually happened here. So that I have my, let's label it, okay, I have my point one, or let me just label it one. I have my point one here. Then I have my point two. Let me just label it two. Then I have my two here. Okay. Then you're supposed to buy here. Don't forget trend line. You're supposed to buy here. Buying good. But then trend line broke here. When trend line broke, I was wondering, what is that going to happen? No? Because this thing did not break this resistance. You need to understand that the price did not break this resistance. The price didn't break resistance. And I was like, boy, it's like this thing is good. It's because people have been sentimental about gold is going to sell, gold is going to sell, gold is going to sell, gold is going to sell. And I'm like, until I see sell, I'm not going to sell low. I keep following the trend. And don't forget, I promised myself, don't forget the statement I told you. I'm not going to sell until my support is broken. I'm not going to sell low. And but then the thing didn't break here, unlike here now. Unlike you know, unlike somewhere around here, it broke this structure here to the upside. Here, it didn't break it. So I was watching. I know that there are people here who knew that everybody is selling and they want to like chop people's money. There's some market makers, some band that want to just make sure that people lose money here. And so I watched this thing. I already made money that day. I think this was London session. London session was between here and here. I was watching, I was like, what's going to happen in the New York session? So I drew this line and I discovered that, boy, that thing got broken up. This thing has broken here. So I said, let me risk. This time around, I could not take the normal, entry. I could not use the normal loss side. You have to use the lower loss side because I was trading against the trend. I think I entered somewhere around here after this thing broke because I was sitting down with my computer. I think I entered somewhere around here with fear. with fear. As long as this 15-minute candle close, pew, I was out of the market because I know it's a counter trend kind of trading. But then look at it. There's something I'm going to be teaching you later concerning what is happening here. Okay, first, this is a trend line breakout strategy. Trend line breakout. The trend line broke out here, and then we were able to sell in this place. And you can imagine by how many pips that broke, the market move. When it moved like this, imagine I told you you're going to be entering from the candle that broke the trend line, few pips below here, few pips, somewhere around here. Then you count by how much did it go? Gold went 488 pips. 488 pips. I think I came out somewhere around here. I think when this candle closed 15 minutes, I think I came out. That's 488 pips movement. Just because somebody drew trend line and then when trend line broke, he was able to enter trade. And I told you earlier, and I said something. I said this trend line now, because it was drawn from obvious. This is obvious. This is obvious. This is obvious. And then people are watching it all over the world, and then the price move, and then it move. But because it's counter trend has not actually changed, and then it could not be sustained for a very long time. But then we still made money in this place, because I was wondering, why is this thing is supposed to go up now? Does it want to break this support? It actually broke the support. I think it broke the support here, and that was how the market went. So now back to the slide. I said when you draw trend line from obvious peaks and troughs, and on a higher time frame, millions of people are watching it from all over the world, and they are taking note. And since everybody is seeing it, when trend line breaks, people they will enter that trade. And then since trend is your friend, since you follow the direction of the trend. So when the trend line gets broken, people are seeing it all over the world, and many people will be acting according to the trend line breaker. So there will be more fund in the market, and market flow in the direction of volume. Market goes in the direction of volume. So if more people enter that trade, more volume of money is pushed in that direction, and it will create a trend. And then if you follow the trend, you're going to make a lot of money. And let's look at it. So let's draw trend line. So let us draw our trend line on H4 and watch on H1 intersecting candlestick close. Okay, let's just do let's do some exercise. So I'm going to be coming here now. I'm going to come into GBP USD, and please, I want you to pay attention here. Please, I want you to pay attention here. I want to pay attention to my screen. Now, I've drawn a trend line. I did the trend line. Okay. So I did this trend line from obvious. This is obvious. Now my trend line breaks here. Now my trend line breaks here. This is 4-hour time frame. My trend line breaks here. So what am I going to do? And I said, you'll be entering a buy stop. Okay, you'll be using a buy stop here. So what will be your entry price? Your entry price is here. Okay, you'll be entering few pips above. So your entry price is 1.35105. 1.35105. That will be your entry price. And then your stop loss will be below this candle or this swing. Your stop loss is here. Stop loss is stop loss is, I always like to use swing. Some people use below the candle that took in. I always love to use swing. I love to use swing here. So my stop loss is here, and then I calculate my lot size. Don't worry, one of these I will teach you how to calculate your risk perfectly well without missing anything. So my stop loss is here, and so I enter my trade few pips above the intersecting candle. And I said we're going to be looking at that on lower time frame now. So this is my intersecting candle, this is my intersecting, few pips above it. A few pips above it will be somewhere like here. My entry will be somewhere around here. How many pips is that? how many between here and here? That's 6 pips. 6 pips. So between 5 pips. So I'm taking a trade because sometimes it can happen that when this candle close above, another candle just close, just formed and close within, below this downward trend line. It means that the trend line is not breaking yet. It was only just a false breakout. And so I enter my trade like that. So and I said you'll be your take profit will be it, see this point. Your set take profit within the previous significant swing or trade your stop loss. So what do we mean by that? This is the previous significant swing. This place there, this place there is just previous significant. So where we your take profit be within. So my take profit is somewhere around here. This will be my take profit. My take profit is somewhere around here. Okay, and what risk to reward ratio is that? Risk to reward ratio. So I'll be risking. I'll be risking. This is no. Okay, wait. Since my entry is on. This my entry is on. Okay, here now. My stop loss. Okay, where I think that's it. That's it. You know, I'll be risking. That's a lot, yeah. That's a lot. But I want to teach you to use swing for your stop loss. I don't want you to use candle for your stop loss because I don't want to use candle for your stop loss because some people their stop loss will be here. Their stop loss will be so their stop. There are people that you know their stop loss will be here. Will be at this point here. Okay, but I love it when you use the swing. It's much safer. Because price can come down and then still eventually go in a direction. So your profit will be how many pips? That's like 136 pips. But then your risk is much. Your risk is much. But price didn't really go back down so much. Your risk is much. Your risk is 143 pips. Wow, that's much. Okay, it's because the trend line is drawn on 4 hours and your take profit is 134 pips. But that doesn't mean that's where the market turned. Okay, market was still going. So if you not trade stop loss, so one way to set take profit is to put your stop loss within the previous swing. But then if you trade stop loss, okay, so you'll be moving your stop loss. The moment price moves your direction, you bring your stop loss to your entry. You'll be swinging. Okay, as the price is moving, you'll be swinging. Then you'll be swinging. And here is where the market will take you. The market will definitely take you out here. Because when you swing from here to here to here to here to here to this place, market will literally take you out from there. So what will have been your profit if you were trailing your stop loss? You'll have come out with 210 pips. 210 pips on that market. So let's move further because I want to show you a lot of things today. Let's get back to our 4 hours. You discover there's a particular line. There are some lines I drew here. One of the things that make Trendline powerful, which I need to show you, is Okay, let me show you something here. Let me show you something on on this place. I think I've okay, let's before we go back there, let's continue checking. Let's continue checking. So you see, this is another trend line. It has how many points, how many touch points? It has the first touch, then it has the second touch, it has the second touch here, then it has the third touch here. I remember telling you in one of those classes that the more times the trend line is touched, you know, the more powerful it is when market will move, when that trend line is breaks out, the more powerful the movement will be in most cases, definitely not in all cases. Now we have 3 touch, point 1, touch 2, touch 3. Then price broke out. Price broke out from here. Price broke out from here. So let's switch to 1 hour time frame. Let's say we draw this trend line on 4 hours time frame. We want to watch it out on 1 hour time frame. And see, now trend line broke from here. Don't forget I told you there must not be intersection, there must not be any bridge between point 1 and point 2. There must not be any bridge. But then see this now, see this. Imagine when this price was forming. Imagine when this price was forming, and before this candle closed, when candle was still here, you have entered a buy on this place. Now you will have lost your money. You will have lost your money. That was why I said, number one, wait for the candle to close. Wait for the candle to close. Number two, enter your entry. Let your entry be few pips above that crossing candle. So let's say, for example, if you are waiting for this candle to close, you will not be a victim of this now. Okay? You won't have, you won't be buying here. Even if you say, I want to take buy, and you follow the second instruction. The first instruction is wait for the candle to close. The second instruction is set your buy stop few pips, between 3 to 5 pips, above the wick of the candle that take you in, or that intersect the trend line on uptrend. Okay, so you'll be taking an entry from here, and then here now you'll not be stopped. I remember I did something like this last week. Price did not eventually come to this side, and I closed the penny order later. I closed it because price didn't come there. I took the candle closed above my trend line, and I put a penny in order, and the price didn't reach there. It went down in opposite direction, and I said, well, thank God I closed it, and I came out of the market. So now here now trend line has broken. Now this candle has intersected. Okay, the candle has intersected the trend line. So what do? My entry is few pips here. This is my entry. My entry will be here. Look at it. My entry will be here. My stop loss will be here. Then see the price went in my favor. If I trade the trend line. So what did we say? We said your take profit will be within the last obvious swing. This is the last obvious swing. The previous obvious swing. See, the price did not even get there, but we said within it. So anywhere around there, at least we will have lost some profit in this place. But price did not get to our obvious. It did not break this obvious, because this is the next obvious. I think this is another obvious. Yeah? This is another obvious that you can use. If you use this obvious, this is also obvious. If you use this obvious, you will have had a take profits. You'll have had a take profit. But if you decide to trail stop loss, so what happens is that when your entry is here, then your stop loss is here. As price move in your direction, you bring your stop loss to break even. Then as price move upward again, as price get to this place, you move your stop loss to the last swing. As price gets to this place or somewhere, I move my stop loss to this last swing or move it here. Okay, then it gets breakouts. Then you are watching for another entry. Then look at this again. Let's get back to 4 hours. So let's delete this. some of these things that we have drawn. Okay, let's delete some of them. Now, this is another trend line. This is another trend line on 4 hours. This is another trend line. 1, 2, 3. It broke here. At the breaking of this trend line, so what happened to it on 1 hour? What happened to it on 1 hour? Trend line has been broken. Trend has been broken. And this is the candle that broke the trend line. So what happened? My entry, my goodness. My entry is below that candle, few pips below. My entry is here. What's my entry price? My entry price is this, is 1.35402. My stop loss is here. My stop loss, normally people use their stop loss. There are two ways to set stop loss. Some people use the candle that intersected the tail of that few pips, few pips above it if you are selling, few pips below it if you are buying. They will put their stop loss around here, which is not bad. Okay. So those are the two ways to set your stop loss. Either you set the previous swing or a few pips above the intersecting candle if you are selling, or below the intersecting candle if you are buying. Those are the two ways to set your stop loss. And so if you set stop loss here or here, this is for the swing. If you set it here, then you take your stop loss, then you take your trade, enter, and then see how the price is moving. It's still moving, it's still moving, it's still moving. And we said your take profit will be within the last swing, within the previous swing. The previous swing from here now, these are the previous swing. Imagine, this is the previous swing. So some people will have put their take profit around here, take profit, or here. These are previous swing. But the immediate previous swing, it is what is advisable to be on safe side. Now, the take profit will have been here. But if you are the one that want to trail your stop loss, to trail stop loss means you are following systematically. So the moment price move to this side, you bring your stop loss from here, you bring it to your entry. Then as price move to this place, your stop loss comes to this place. As price move to this place, your stop loss comes to this place. As price move to this place, your stop loss comes to this place. And maybe you will have been stopped out around here. You'll have been stopped out around here. Except if you don't shift it very close, you'll have been stopped out around here. And see, price is still going down. It's still going down and it's still going down. And that is that. Now, let's take the next one. The next one is this. We'll draw another trend line. Boom. Another trend line is like this. My goodness. Trend line is powerful. Trend line is powerful. It can give you Ferrari within the shortest period of time. Oh my goodness. Boy, I love it. I love this thing. I love this thing. You just sit behind the screen and just cash it. Just be cashing, just be cashing out. Just be cashing. I'm telling you. And see, I've done the trend line again on 4 hours time frame. Pong, pong. See the point? First, see, I talked to something maybe last week, and I said price does not always sustain when your trend line is steep. When we're talking about trend line bounce, not trend line breakout. Now, there are two types of trend line. The bounce, that means when the price bounce when it reaches the trend line. This is the second strategy on concerning trend line. This one is trend line breakout. I draw 1, 2. Look at this trend line, it's very steep. It's not going to be sustained for a very long time. It will break. It is too steep. But when it's a little bit gentle, is better when it's a little bit gentle. Now here, so steep. I know this thing will break out. So what happened? Boom. So we said, let's take it to so we drew it on 4 hours time frame, but we want to watch it on 1 hour time frame. On 1 hour time frame, this is the candle that broke the trend line. So what happened? My goodness, boy, I love this thing. Chai. See now, where is my entry? My entry is few pips above the candle that broke the trend line. Few pips are above here. So what do you think happened? Where will my stop loss be? Two philosophy concerning the stop loss, either below here or here. Either of them is very okay. So I put my stop loss somewhere around here and I watch the price. So where did we say your take profit will be? Within the previous swing here. This is the previous because I'm back. This is the previous. So my take profit will be somewhere around there, between here and here, take profit. But if you are a swing trader, a swing trader will just be following the swing. Okay, so if I hope this video is not getting too long, my goodness, but I'm enjoying what I'm doing here. Oh boy. Now, if I put my stop loss here, as the price goes up, I'll be pushing it. First of all, this is one thing I used to do personally. Until price move beyond above my entry, I don't shift my stop loss. Some people will say it is risky. Maybe you can shift it to reduce your risk. No, I don't do it. For example, if I'd entered here, when price moved to this place and I shifted to this side, or I've shifted, or maybe okay, I'm entering here. If I've shifted here now, if I've shifted to this side and price come down, I'll have lost money here. So I leave it until price move above, move beyond my entry. So when the price is getting to this place, if I did not set take profit, my price is getting to this place, then I push my stop loss to this place. Sorry, to break even first. Break even is always what I'm always looking for. Break even. The moment I enter break even, sometimes if I have just a single trade to work on, I just close my system and I walk away. I drive or go to gym or do some other things. Just the moment I break even. But when I break even, I stay closer to my system, until I break even. You know, and especially, but if it's day trading, when I'm just looking for a few pips and get out of the market, if I'm trading on if I'm trading session, trading London session, New York session, most time I stay with the computer, get out a few pips, and get out of the market. And so I move the stop loss, I move it here, then I move it here, I move it here. Then the market will have closed me out here, which is still better than setting take profit. There's nothing wrong with setting take profit, but I'm just explaining to you somebody who trails stop loss and somebody who sets TP. Okay, now please let's go back to 4 hours. Let's go back to 4 hours. So now this is another trend line drawn, from here to here, to here, to here. Now trend line has been broken here, has been broken by this candle. This candle broke the trend line. Did you see it is steep? It is steep. When it is steep like that, it cannot be sustained for a very long time. When you see a trend line steep like that, just be looking for a breakout. It will soon break out. Boy, it will soon, it will break out. It must to break. My goodness. Now, I see that this candle has been broken here. So what happened? Come on here, come on here, come on here. I'm going to be entering, my entry will be few pips below the wick of the candle that took me, that broke the trend line. Then in this case now, my stop loss will be here. So many times I get very, very crazy. I set my stop loss here. I get crazy, but see, usually it is where the stop loss supposed to be. Suppose few pips, below this, candle. So now, okay, we didn't switch to 1 hour, that candle. So let's switch to 1 hour, H1. I'm trying to see, what I'm trying to do here is to compare, is drawing a trend line on 4 hours and making your entry on 1 hour. Okay, and so I've drawn it here. This is the candle, this is the candle, all this candle that broke me here. Then I set it, my entry will be here, and then I can trade my stop loss. Where will be my take profit? My take profit will be the previous swing. What my previous swing? Here. So if I enter here, my take profit is here. This is my previous swing, or here, but here is too close. Here is okay. My take profit will be somewhere. Then let's go back to 4 hours. There's something I want to show you at the end of what we are doing, this exercise. So we are doing it together now. All the assignment, for those of you that did not do the assignment, now we are doing it together. Now, this is another one. Now, in most cases, when the candle that broke, when the candle that breaks the trend line is too big, you just stay away from the market. This is news. This is news. But do you know that I traded this? Sincerely, I traded this. There was a news that particular day, and let me show you how I traded it. So I've already drawn this trend line. I remember I traded this. I was on my computer. I was expecting a sell. Sell wasn't coming. Yeah. I remember how I traded it. I remember how I traded. News was coming. I think it's a very big news. I can't really remember that particular news. So what I did was here, I did this trend line. Here, I put a pending order, a buy. And then below here, I put a pending order, a sell. Then it was supposed to buy here and come out here. Here, I did stay long there. Very few pips. Here was my entry. Here was my. So I was like, when the news comes out, if this trend line breaks, I'm going to enter in a buy. So I said that pending order before the news came out, a pending order to buy from here to here, a pending order to sell from here. I don't know where did I put myself? I said I put myself somewhere. I put myself somewhere that if it comes down around here, this is the candle that was forming before the news came out. I think I said, okay, I think I did another trend line somewhere around here, or am I using support and resistance? Don't worry, in the next few classes we'll be talking about support and resistance. Very powerful. So I look at it from there. I think I took some pips in profit. I didn't go beyond here. I remember that news. But if you are trading trendline breakout, the moment this candle closes and you are not trading news, please don't enter it. Your stop loss will be too much. It will be too much. So just stay away from this kind of a thing. Just stay away from it. Just stay away from it. That's the only way you could trade it. If it is news, I put my pending order to buy from here when at the break of it, and then I put my stop loss. Put my stop loss, I think around here, and then I was only taking very few pips, and I was out of the market in that place. So let's look at the let's look at this last one here, or this another one here. This and this and this and this and this. Then the first of all it bounced. So I have my first point, second point, and then I have my third point, and then the trend line got broken. Trend line got broken. Let's sit out in 1 hour. The trend line got broken. The trend line got broken here. Wow, you can see trend line got broken. Trend line got broken. Now look at it. Look at it. The trend line got broken here. Now let me see. Let me show you something. Honestly, you will have escaped. You will have escaped. You will have escaped this pullback to the downside. And if I were you, I would still win. Now, I'm going to be entering my trade few pips below the candle that broke. I think I will escape something around it. I think I should escape. I think I should escape. Okay, it has broken. I'm trying to measure how many pips. That's much. That's about honestly, that's about 9 pips. I will have been here. But you know that my own stop loss will be the last swing. My stop loss will be here. My stop loss will be here. That last swing. Usually my stop loss. And then if I enter the trade here, and put my if I enter a trade there, a sell, give my stop loss to this last swing. Okay. And price still came down in my direction, in my favor. Now, and that is that. That is that. That about that. Okay. Then we also have this trend line also. We also have this trend line 1, 2, 3. It broke to the upside. If it breaks to the upside, it breaks to the upside. My entry is here, and definitely I'm not going to lose this trade. I've done another one here. Look at another trend line that is drawn for this is even on 4 hours. This is even on 4 hours. My first point, second point is breaking. When it breaks, I think I drew something like this because it was consolidating here, and I was telling myself, this is what I do when market is consolidating. I draw a box. I was waiting when the lower part, when the price break that box. Unfortunately, this is my first strategy ever in trading synthetic indices in my entire life. When I say consolidation, I draw a box. Wherever the price breaks to is where I enter. But let's forget about that for now. But it's also advisable when market is consolidating, I draw the box. and I wait for where to which side of the box will the price break to. Wherever it breaks to is where I entered. And then um so let's take this to 1 hour time frame. Boy, you're already staying up on this video. Okay, but is educating. So I enter my cell. Okay, I enter a cell from me. Imagine trend line. Boom, enter a cell around here. The candle that breaks in, that break the trend line, enter a cell from here, and then I'm down here. And then if you are the one that trade your stop loss, you are here. I'm telling you, this is where you're coming out of the market. That is it. But if you use the last swing to set the take profit, it will be somewhere around it. So if you enter it from here to here, that will be your take profit will be the previous swing. Your take profit will be here, and then you will have come out from this market with how many pips of profit? You will have come out with 43 pips of profit, 43 pips. And then what will you have been risking? You have been risking you'll have risked like 32 pips to gain 43 pips, and that's more than 1 to 1. That's more than 1 to 1, 1 to 1 point something. Now let's get back to the slide. I'm excited about this. Now the next thing is this: the power of 3 TP and 1 week data give you explosive movement. The power of 3 should I teach this now? Should I teach this now? Should I teach it? Let me quickly do it. Let me quickly do it. I think I'm going to be buttressing it in the next video. In the next video, you discover that now. Let's do this. Very powerful. My goodness, boy, 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 boy. Now, this was why I put these vertical lines to begin with. Now look at this. The moment when you have the 3 TP means 3 touch points. If you check one of my video, if you check some of my video where I've trained you in the past, you see I label something on my screen, I put 3 TP. It means 3 touch points. Now watch. But we'll be combining two things together. 3 touch point and 1 week of data. 3 touch points. This is 3 touch point. Point one. When you have a trend line that has 3 touch points. Okay, now let me quickly do something. Let's get back to that goal that I was talking to you the other time when I said everybody was selling and I was buying. See my 3 touch point. 1, 2, 3, and then price broke. My goodness. The only reason I was able to sell because I had 3 touch points. 1, 2. When you have 3 touch points, it's always very powerful. Always very powerful. And then what is 1 week of data? When between the first point and then the last point, okay, the last point, or when where the price is breaking out, you can count a week, a complete week of data. Now check this. Now is it up to 1 week, sir? Is it up to 1 week? This is 30th of September and 2nd of October. That's about that's less than a week, right? 30th and 10th of October, that's less than a week. So the complaint is very powerful when you have over a week of data and then you have three touch points. So you have the moment three touch point is very powerful. And most time it goes explosively. The market moves explosively. See this. Point one, point two, point three, the market breaks out. Point one, point two. This doesn't have up to 3 touch point, but I think it has over 1 week of data. It has over 1 week of data where price broke out. So we have 24th of July, then we have 8th of August. That's over 1 week. So when we have 3 touch points and over 1 week of data, market moved. And you see, market moves. They have another one. Look at another 3 touch points. Point one, point two, point three. You have here, you have one here, then you have two here, then you have three here, 3 touch point, and the market breaks out. Like, see what I'm teaching you now. If you don't make money in the next, if in the next 1 year you don't become a millionaire, you will offend me. I'm telling you. I'm telling you, I'm giving you powerful secret that cost some of us years and pains and loss of money to come by. Now you see three touch points. One first point, second point, touch point. The market breaks out. And then another thing, at the beginning of the first touch, then to the breakout. How many week? How many days? 1st of August to the 18th of August. Is over 1 week. Price will come down massively. Price will come down massively. And let's see, by how many pips did that price come down? How many pips? Let's measure it. By how many pips? Our entry is here. It came out by 145 pips. 145 pips. Let's say another one. Another one here. Then to this side. When it was breaking out, how many days of data? We have 3rd of September, then we have 18th of September. That's over 15 days. That's like 2 weeks. And price breakout, you can see it's going down again. My goodness, sharp buyer. I love this. I love this. I'm giving you guys secret that I'm for free of charge. My God, my goodness. Now watch this. See this three touch point. Okay, I think I've already shown you this, and then you see it again. How many weeks of data is this? One, and then it takes 1 week of data like this, and then like this, where is breaking out. Where is breaking out? 16th to 28th. That's over 1 week of data, and the price still broke out a little in that direction. But if you save it to 1 hour time frame, it might be massive. It might be very massive. So like here now, between here and here, I think is 16 to 23, over 1 week of data. 16 to 23, over 1 week of data, and then I broke down. So when you count this, that's what I mean by the power of 3 touch point and 1 week data give you explosive movement. That is what I mean by that. That is what I mean by that. Oh, this one is what